Good morning, everyone. In my Discord group, someone messaged me uh, that person has asked my views on in month of September and my views on Dixon and Bosch Limited, and that view has gone wrong. Okay, and that person doesn't have faith in analysis and chart pattern reading. Okay, so uh, this is the condition of most of the retail traders, most of the new people, including when I was new in market, this was the view that someone gives me some kind of analysis and that's all. That's all. It will go wrong. Sorry, it will that analysis will go correct, and that's how I will trade. And that's how I will make money. Now, few points about it. Firstly, the basic psychology of a human being. Human beings, they love to believe things. We see in our daily life politicians before elections, they will make promises, they will give us those golden dreams, they will tell us how they are going to work so that our lives improve. And we all know this is every year drama, and obviously like 20-30% things materializes and 70% don't materialize. But even then we feel happy whenever someone tells us good things or good future about our good future of ours. So the basic human psychology is that humans prefer to believe things rather than critically analyzing them. So it means we are always looking, in order to get that comfort, that mental peace, we are always looking for someone to tell us something. And that is the reason we see on channel on this social media like Twitter, Instagram, Facebook, so many social media handles cropping up, and there is no back tested data that what is the win rate in what kind of market, what is the win rate of these Twitter handles. Okay, one can obviously do it. You have to pick up one Twitter handle, you have to go through last 3 years, 4 years of history and check it with the market, and you will realize what is their win rate or hit rate or how good is their analysis. But I'm very sure very very few people take pains to do that. In fact, I have multiple times posted on my Twitter handle that there is a research paper which was published by some I think Swedish financial institute or someone, where they have back tested these things, and they have clearly brought out that the larger a handle is on social media, the poorer or the even bigger is their or poorer is their analysis. Because the large handles or the basic way a good social media influencer works is that they catch the sentiment of people, like our political leaders. They catch the sentiment of people and they say what people want to hear. So if people want to hear that market will go up, they will say that. That's the same thing we see on TV also. If people want to listen that market will go down, if there is fear, there is panic, people want to, and people have already exited, so now they want to hear that market will further go down, so that their ego gets satisfied that yes, they exited the market at the correct time, and because market will go down, they want to listen to that, and that's what those handles will tell them. When they are holding their stocks, they want to listen to someone who tells them that market will go up. Okay. So this is the basic human psychology. But actual market don't work that way. In markets, majority will always lose, especially in trading. In long-term investing, yes, if you are looking for long-term investing, that's okay. But in trading, on a time frame of let's say few weeks to few months, or maybe even 12 to 15 months, majority will lose, and that's how minority will win, because someone has to lose so that others can make money. And how will you do that? You will do that by going against the sentiments of majority. But while this is something which is in theory, next question comes how to have those tools which can actually clearly define the majority sentiments. Okay, so that is not impossible. There are tools, and if you just read books, if you read previous things, you realize that like if it has been a 18 months of bull run, then obviously it will not take less than 9 to 10 months for people to turn bearish, because for 15 months they have seen bullishness. So basic human tendency is that 15 months of bullishness will not evade in 2 months or 3 months or 4 months. It will take 9 to 10 months. If it has been 4 or 5 years of rally, then it will take like 12 months plus and a very steep, very steep correction, so that people become bearish. So these are basic human psychology nuances which you can understand if you study the past patterns. Okay. Now the next important topic which I want to talk about is probabilistic thinking. And here I would like to show you few data. Okay. So as my group members know, I've been working on algorithmic trading for last 1 month, and I will open few of the indicators which I have made for forex markets. Okay. Yeah. So basically there are 4 concepts which I have been working on. One is simple on hourly time frame pin bar strategy with multiple filters. Other is swing failure strategy with multiple filters. And third is engulfing strategy with multiple filters. And fourth is basic trend following thing, which is super trend based strategy. Okay. Now since most of the listeners are trading Indian markets only, so I will go with the super trend strategy, and I will open Nifty futures for you. Okay. So here are Nifty futures, and I will close this, and I will open. This is a simple trend following strategy on Nifty futures, and I will put the settings. Most optimized setting I will put, which will give us best of the best results for this particular strategy. 24, 2.8, 1.25. $14, 10, 0.1. I will uncheck this TTM squeeze filter. I don't want any kind of ATR. Okay, let me take this. Yeah. Okay, now ATR multiple. Okay, let's keep it at 1.9 and let's see what it is. Okay, and now I will say since this initial graph you see is from November 2020, so we need to change the number of lots, because one lot now that time was and we need to take it to INR. Yes, 2 contracts, right? And I put commission, I think it is, I'm not very sure, 100 per contract, that is 200 per trade. Margins, let's say 12%. Okay, so this is the result this strategy would have given in last 4 years. Yes, exactly 4 years. That is a return of 6.69 times, 669%. That is your money, your 1 lakh of capital would have become 6,69,857. Okay, and you see while Nifty, this is the blue line which you see below is the buy and hold equity, and this is your equity. This is your profit graph. Okay, total number of trades taken were 214. So 50% trades were profitable. In between, 31% of drawdown we had to witness. 31%, remember, 31% of drawdown. And there is the average trade and other things, and there is other lot of details you can see here. Okay, we can even further try to optimize it by, because I have put ATR based. Since equity market generally they go up, so I have taken ATR based thing. But let me say that you are long. This is long only strategy. We will trade only long. We will not trade short side. Okay? We can do that also, or we can do both. But let's optimize short side. Okay? So here short side trades are making loss. So we can try to optimize this ATR multiplier to see we can make profits here. Yeah, so if we take it 0.9 multiple of ATR, because market has been a bullish trend generally. Yeah, like 0.7, so it has given very good profits. Okay, 92 on short side also. Okay, so as we are reducing the targets for short side, because market has been generally bullish, we are getting better results. So let's take the highest value, that is 1 lakh. Okay, so this is the graph on the short side also. Now we have made money on both long side and short side. So this is the best possible thing which could have happened. Okay. And okay, so now your profits has increased. So profits have become that 1 lakh of capital would have turned into 7,39,742. Now percentage profitable is 64%. Okay, profit factor is 2.01. Now this is a past performance. That is the first thing. So if we get a bull market which is identical to what has happened, how it has transpired in November 2020 and November 2024, we would have got these results. But will next 4 years will be similar to this? There is no guarantee. You don't know how. And there is one guarantee that whatever it may be, but it will not be like how it was in 2020 and 24. Because change is the only constant factor here. It will not be like that. That is guaranteed. Okay. So just to show you, so if we just do some deep backtesting and we go to, let's say, 2007. Yeah, now I've changed the time. Now it is from 1st September 2007 to 30th October 2024. Okay. Now we see profits are 9,64,230. But what we need to remember is that lot size. So earlier when Nifty was at 6,000, 5,000 levels, so lot size equivalent to today, we can say 4 contracts. Like we started with the 4 contracts. And this strategy would have given 19, your 1 lakh would have got converted to 19,28,460. Okay. And this is the graph, and main growth actually came, I think, post-COVID only. Yeah, post-COVID. Profit percentage profitable would have been 60.77. But you see major drawdown here, COVID. I think here this was 2008 thing, then here I think 2014. So we can do some tweaking to make more money in short side trades. We can simply increase the, because things have changed on a longer time frame. Okay, let's see what happens. We will target 4 ATR. Okay, now results have changed. Now see, your profits have improved. Now it is 21,25,150. And you see your drawdown. What happened at COVID? Market went sharply down, but your curve did not go sharply down because you made profits in short side also. Okay. But what has happened here? Your percentage profitable. Yani earlier your 64% trades were profitable. Now only 40% trades. So now that's what I'm coming to. I want to go to probabilistic thinking. Okay. You need to realize this. Once we have tweaked, we have increased targets for short side trades. Your net profit has increased by 2 lakh rupees. Okay, earlier it was 19 lakh, now it is 21 lakh. But your number of percentage of winning trades had reduced dramatically from 64% to 40%. Now the question is, how can we make more profit if we are losing more? It means out of 100 trades, we will lose 60 trades. If we want to make this much of money, we have to lose 60% trades. Now, are you ready for that? Are you ready to lose every 6 trades when you take those 10 trades? Or let's say, are you ready to lose 60 trades when you take those 100 trades? And who knows the sequence of those losing trades? While out of a sample of 100, 60 will be losses, but no one knows what will be the sequence of those 60. So, like in this case, I don't know if this shows the largest losing streak. No, it is not showing the largest losing streak. I think in MetaTrader 5 they show it. So, your largest losing streak might be of 10 trades here. That you are going to lose 10 trades in a row. And then next 2-3 trades will be so huge that they will compensate for your own losses. So like my friend who messaged me that trades have gone wrong or analysis have gone wrong, doesn't understand the importance of back testing of data, firstly. Secondly, what will be the frequency of trades? A particular system can only give trades, let's say 1 per month. Like this system has given 964 trades over a period of, so this is over a period of 17 years. Now that thing makes it like 50 trades or 55 trades per year. That will make it like 4 to 5 trades per month. Some month it may be 6, 7, some month it may be 2, 3. But that is the average, 4 to 5 trades a month. And then it is telling us that whatever we do, if we want to make this much of money, we have to lose 60% of it. But people can't even bear 2 losses. Okay. So first is that they don't have a back-tested system. They don't know their data. They don't know their data over a period of even 1 year, how it is going to work. Secondly, they don't understand is it a trend following system? See, this is a thing which is trend following. Since it is trend following, it will not have a win rate of more than 40 to 45%. But then how it is going to make money? The reason is here. So you see, okay, yeah. So average winning trade is 21,624 rupees. While average losing trade is 11,000 rupees. So when you are losing 11,000. When you are making money, you are making 21,000. Now largest winning trade was 1,83,000. Largest losing trade was 84,000. So this is how it is going. It is making money. Whatever win you take, those 40% wins are much larger than your losses, and that's how you are profitable at the end of the day. Any trend following system will not have a win rate more than 40 to 45%. You can have 64% of win rate as I have shown earlier, but in that case your overall net profit will reduce. In that case you have to reduce your targets, and your net, while your win percentage will increase, but your net profits will decrease. Now you are looking for win percentage or net profits that you need to decide. Okay. So there is a lot of data which comes out of it. So when we say probabilistic thinking, what I want to emphasize is you have to be ready. You have to know that your system is going to give you this much of losses. And a better way of looking at it is drawdown. So here we see a drawdown, maximum drawdown, it is showing over a period of last 17 years of 33%. Let's say 34%. It means if I want to trade today, I will trade one lot of Nifty, which cost me like 62,000, 65, 70,000, whatever it is. I need to have 70,000 plus this 34%. That is some 25,000 extra. That is almost 1 lakh of capital. Because I know my system will give me at some point in time, it will give me 34% of drawdown. So, in what sequence it will be? Will it come in 3 trades, 4 trades? Will it come in 10 trades? I don't know. The sequence of wins and losses, no one knows. No system can tell you the sequence of your wins and losses. They can tell you something over a sample size. And when I say 100 trades, it is actually less. This thing actually works out on when you take trades, a sample size of more than 500, 600 or even 1000 trades. And those who are professional algo traders, they like to take a sample size of 15,000 to 20,000 trades. I am not a algo trader. I am not somewhere. I am just transitioning towards algo side. And I am somewhere in between. So this sample size of 964 trades is also not enough. But okay, it is on a longer time duration, so it might be enough because it has seen multiple cycles of flattish market, bull market, bear market. So this is very important thing to understand. And if we don't know the sequence of our losses and wins, it implies that we need to have a robust risk management system. So if I'm planning to take next 100 trades and I Because of my system, I know that I am going to face a number, since 60 out of 100 trades, 60 trades are will be losses. What is the worst possible thing for me? That my next 60 trades are losers. This is the worst possible thing which can happen to me, which is very unlikely. But then let's say that is the worst possible thing. Okay, I am going to lose over next 60 trades, and then I am going to win over next 40 trades. Okay, a more probable thing will be that I am going to lose over next 13 to 14 trades. As a worst possible thing. This trading view, they don't show it, but you can use ChatGPT and other things to know the largest losing streak. Okay, so you will realize that it will come with like 8 to 10 trades one would have lost in a sequence. So if I am going to lose 10 trades in a sequence and I will lose, and as per the system I am going to lose only 34% of capital. So it means every trade it will be like 2, 3, 4% of loss of capital. So I need to know my risk. So I cannot say that just because this system is making profit, so I will sell my house and I will put everything in Nifty futures and then forget everything. No, it doesn't work that way. Because when that drawdown will come, and if I have taken a bite which I cannot chew, I will have to vomit it. That's how you will get destroyed by market. So despite that someone is very good in analysis, they cannot put their all money here. Because of this thing, they don't know what will be the sequence of winners and losers. And that's why risk management. If I take trades and I lose next 20 trades in a sequence, even then I should be able to trade. Because the more trades I lose, I know that the winners are coming nearer to me. If I have a series of winners, let's say if I win next 5 trades, what should I do? Generally, what happens with a new trader, once that trader wins 4 trades or 5 trades in a sequence, their confidence is at sky high. They start extrapolating their success, not knowing that since they have won, the theory of probability tells that if last 4 trades or 5 trades are winners, there is a very very high probability that next 2, 3, 4 trades are going to be losers. So they should in fact either stop trading or reduce their position size dramatically. But what we do opposite. If we have won 4 to 5 times, we increase our position size. We become more aggressive. And then we lose all those gains and even lose more money. So in a similar manner, if I have lost 10 trades in a row, then we should be in fact more confident that that streak of losses is about to be over and now the streak of winners is about to begin. But that's not very normal for humans to think, and that's why traders, they have to think unlike humans and they have to take contrarian opinions, not what masses are telling. So this is a very short video and you can comment on it. You can tell me on my Twitter. You can join my Discord and tell me what you think about it. And I must say that it is a process and it is a system. And it has to have very, very clear rules. There is nothing emotional here. There is nothing vague here. There is nothing left to whims and fancies. And that's why when you change your strategy into algo trading, then you have to write that code and then everything is crystal clear. And then we have different types of market. So when I change the time frame again, the results change. Now it is 42% of profitability with a larger profit factor and 40% of drawdown. So I need to understand that if it is since I have increased the profit target for bearish trades, I am going to face bigger drawdown in a steep bull market. Okay, because my short trades will lose, but if I reduce it to 0.5 ATR, suddenly now percentage profitable is also more. Drawdown has reduced to mere 16%, but then I don't know in future that is going to be such a steep bull market. So we cannot have everything in our hand, and we need to leave things on probability, and we need to think for a longer time. That what if I am going to play this strategy over the next 15 to 20 years? What kind of settings I need to make? Or as per our analysis, if we feel that now it is a set trend and drawdowns will increase, we can reduce the drawdown targets or the short side targets. Okay, and so as per this strategy, as I mentioned yesterday on Twitter, also I'm already short on Nifty futures. See this strategy. I was short right here. Simple. And yes, I was not following this since analysis were telling me that it is a we are in a face pick up bigger market, so I didn't exit here. I exited somewhere here. And some dips off, some losses, and then I was short again and made some profit here. And I'm short again. So after one good trade, then I'm getting some minor losses, and then again next a larger profit. So that's how it is working. Okay. You can see other strategies also. I know Euro USD. Let me put some like pin bar strategy. Anything you see now, percentage profitable is 47%. Okay. Out of 120 trades in last 3 years, 47% are profitable. So 53% are in losses. Your drawdown is, you have some drawdown, 0.07%. So I will request all people who are putting their money to be ready to do some hard work, to get serious about things. Don't treat market as house of gambling. Okay. And there is a lot more to it than what it seems. There is a lot more to it. And most of the work you have to do on yourself, not the market. Market is neutral to everything. If someone is making profit from market, it is same for that guy, and someone is making loss, it is same for that guy. It is the way how you choose to behave in market. So if there is something which has to be improved, is to be improved within yourself, not in the market and not in the analysis. Technical analysis, the moment you change your targets, the moment you change your stop losses, the moment you change your entry methods, your technical analysis, the same thing starts giving different results. Your risk management and execution are more important than your technical analysis. Now, from here I will come to the important point of Elliott wave also. Because as I see on social media, there are two lobbies. One is dedicated Elliott wave bhakt, and other people, they are anti-Elliott wave. But retail is a great fan of Elliott wave. There is no doubt. There is no doubt about it. And why they are great fan of Elliott wave? Because Elliott wave with its methods try to give some prediction about markets. Okay, like here, and it works. I'm not saying it doesn't work. Like I will show you for Nifty 500 that day on my Discord channel. I have given, this was wave A. In fact, this was last Sunday, I think I have told. And this was wave C. And now wave C was equal to wave A. So there was a probability that now we are going to see a bounce, and bounce came. So it does work. There is no doubt. But why? Question is why it is so attractive to retail? Because while it works, it is not the only thing which works. And you cannot trade markets efficiently only with the help of Elliott wave. Elliott wave, for me, as I use it, it just gives me a broad market structure But when I have to trade it, then I have to see at candlesticks, I have to see at volumes, okay, I have to see time cycles, I have to see things like volatility, I have to see what moving averages are doing, I have to see what VWAP is doing. There's so many multiple factors, what the fundamentals are doing. So while initial structure, yes, Elliott wave is important because it is simply an extension of Dow's theorem. Okay. But why is it so attractive to retail? Because it gives them a certain target for stocks, for indices, for everything. Okay. So it gives them that comfort of certainty in market, which actually is not there. So while this wave C equal to wave has worked multiple times, or ABC pattern has worked multiple times, it has not worked multiple times. It has worked, I will say 50% of time, and it has not worked the rest 50% of time. Like here, on 1st of August, there was a big gap down. This gap was even bigger than this gap. And myself, I was expecting that wave A down and wave B up, and then we should see wave C down, but that thing didn't come. It started going up. But someone who was practicing pure price action would have realized that wicks are getting longer, or they are getting buying support at low. And yes, I got long here on 16th of August after this thing, and I saw that now it has made higher high. Okay, so it has worked beautifully in Nifty, and I myself use it to get an idea of to project for a target. But at the same time, I know that especially on shorter time frame, that it may not work. Okay, so I will show you. It has worked beautifully in something like GRSE maybe, or so let's talk. Yes, GRSE. So this was my wave count market, and I in my earlier I had a Telegram group, and people know I exited right here at 2700 levels with fifth target. And I think logic was yeah, you see wave 5 is exactly 0.618 of wave 1 combination. If you add wave 1 and wave 3 and then you take 0.618% of that from wave 4, it reaches there at 2868, and that's where it reached and topped out. So it works, but yes, it doesn't work multiple times. I think it works only 50% of the times, but even that 50% is very profitable, or it might even work 60% in cash market. But in futures, remember, in futures where there is more elbows which are working, okay, that's why future people are more profitable in cash market than your futures and options, because futures and options institutes are trading because they have larger capital. Simply, they are derivative products, so they need larger capital, and they are manipulating it more, especially on shorter time frames. If you say next 1 month where this garden ship will go, I don't know, I can't tell, but I know a simple system that if I have to short it, I will short it with a trailing stop loss, like something I will use. If I have to short this thing, it may be any stock or any asset, but I have to short it. Firstly, I will not short it here. I will wait for it to reach this zone, this fair value gap here, and somewhere like 1650, 1660 levels, I will take a short position, and I will use something for stop loss. No? How do I know I'm wrong? So I will use like Chandelier exit. If it gives me a exit signal, or something like this pivot high, if it closes above that, okay. And once I know that if I'm taking a position here at let's say 1670, and then I will exit here, then there is a risk of 13%. Can I take that risk? Do I have that much of capital that can I take? If I have, then it's obviously okay. If I can take such 10 trades and I have enough capital and enough mental, not only financial capital, enough mental capital to take that amount of losses, then it's perfectly fine to go and take that trade. It is so simple. And that's how things are traded. There is nothing, no magic about it. It is very simple. It is risk management and execution, which is much more important than your technical analysis. It may be price action, it may be LUT, it may be anything. Because nothing works in technical analysis for more than 50% of the times. Breakout trades. Now, breakout trades work beautifully, but when there is a market for them. So, somewhere like in June or last year, like this thing, this GRSE gave a beautiful breakout on 17th May from this long base. And it worked beautifully. It did not come back. It kept moving higher. And it gave a good return of 160% in 2-3 months. You don't want anything more than. Okay, this is such a good thing. But then, will it work every time? Will such bases, like it was almost 6 months of base, what is the probability rate? Will it work 50% of time? Will it work 60% of time? Will it work 70% of time? And if it is not working for those 30 to 40% of time, which is those type of market where it is not working? Can I identify those type of markets? And if I can identify, I should avoid those markets. So like current market is such where breakouts are not working that great. So even if something is breaking out from a very long base in current market, it might just go higher and then start consolidating here again and undergoes in a time correction. So in markets, there is no one template. They are dynamic. Now most probably this GRSE should come back, take support here and then consolidate. But what about time? How many months it will take to consolidate and then break out? No, I don't know. But I know one thing, when it will break out, I will take a trade with a very clear-cut stop loss method, and I will have the risk which I can digest. That is called risk appetite. Just because I caught it here, I did not sell my house and invested in this garden reach ship and engineering limited. Okay, these were few of my views which I wanted to share with my followers and my audience. You can tell me your comments on Twitter and YouTube. Thanks for listening. Thank you.